If you live in a major city, pretty much anywhere, you know the feeling, right? That dream of owning a home just seems to be drifting further and further out of reach. But what if I told you that in one country, this global problem has spiraled into something else, something truly unique? Today, we're diving into the extreme case of Canada's housing crisis.
This quote just nails it, doesn't it? Yeah, housing is expensive everywhere. We get it. But the story in Canada, it isn't just about high prices. It's about a whole system that took a global trend and cranked it up to 11, right to the breaking point.
And look, this isn't just a vibe. The numbers are absolutely stark. While Europe was wrestling with its own affordability problems, Canada's housing prices were just accelerating faster. Household debt was climbing to way more dangerous levels, and for a whole generation, that dream of ownership, it collapsed much, much sooner. So, how on earth did this happen? It is so important to understand that this wasn't just a string of bad luck or some random market blip. Nope. This was the result of a very specific set of choices and circumstances that came together to create the perfect storm. Let's break down exactly how. Okay, so to really wrap our heads around this, we first got to zoom out a bit. In this first part, we're going to look at the global housing picture, just so we can see what makes Canada such a wild outlier. And let's be super clear here. At its root, this is not some uniquely Canadian issue. I mean, if you live in London, Paris, Amsterdam, you name it, you know that finding a place you can actually afford is a massive struggle. Young people everywhere are feeling this squeeze. But right here is where the story takes a really sharp turn. While the problem itself is global, the sheer severity of the crisis in Canada has basically put it in a league of its own. It's like the country took this shared global challenge and just floored the accelerator. This really is the million-dollar question we're here to answer. What were the specific ingredients that took a worldwide trend and supercharged it into a national crisis that looks like nothing else out there? Well, it turns out it's a pretty unique recipe. All right, let's get into it. Canada's unique recipe. When you dig into all of this, it really boils down to two huge factors that combined in just the right or maybe wrong way to create this perfect storm. So the first ingredient is a demand shock that is, well, it's almost hard to believe. In a really short space of time, Canada's population just exploded, driven by some of the most aggressive immigration targets in the entire world. And this just unleashed a flood of new demand for housing, all packed into just a few major cities. And this chart right here shows you exactly what happened. On one side, you've got that explosive population growth, and on the other, the number of new homes getting built, which you can see couldn't even come close to keeping up. That huge gap between the two bars, that right there is the heart of the whole crisis. It all just comes down to this simple, brutal fact. Canada added people way faster than it added homes. And when you have that kind of fundamental imbalance, prices really only have one direction to go: up. And fast. But, a surge in demand is only half the story. That brings us to our second and maybe more complicated ingredient, the deep financialization of housing. Now, in simple terms, that's just when a home stops being mainly a place to live and starts being treated more like a stock or a financial chip in a casino, designed purely to generate more wealth. This slide really lays out the two different roads taken. On one side, you have Canada, where housing literally became the main engine of the entire economy. Speculation just became normal, and the country's biggest banks got deeply, deeply tied to real estate. And on the other side, you have a more European model, which often has buffers, like stricter lending rules and much stronger protections for renters. Just think about what this quote is really saying. In Canada, your home isn't where you live, it's how the economy grows. The entire economic model became hooked on property values going up and up forever. A house wasn't just a home anymore. It became the country's single most important financial asset. So what happens when you build your entire economy on a foundation like that? Well, you create an enormous amount of risk, which brings us to our next section, a foundation built on debt, and the really dangerous fragility that it's created. Just look at this number. Canada's household debt has shot past 180% of its GDP. What does that even mean? It means for every single dollar of disposable income in the economy, Canadians owe more than $1.80. It is a staggering, just crushing amount of debt. And here's why that mountain of debt is so incredibly dangerous. A huge portion of it is tied to variable rate mortgages. So when global interest rates go up, like they have been, the financial pain hits Canadian families faster and way harder than almost anywhere else in the developed world. The whole system is just unbelievably vulnerable. And this quote, wow, It reveals the whole mindset that allowed this to happen. For decades, the unspoken goal of government policy in Canada has been to protect the value of homes at all costs, because so much of the economy is riding on it. And that's a huge contrast to many European countries, where the focus has been more on protecting tenants and keeping housing stable.
So all of this leads to a really obvious question, right? If the problem is not enough supply, why not just build more houses? Well, as we're about to see in our final section, it is not that simple. Canada is caught in what feels like an absolutely unbreakable housing trap.
And here we have the Great Canadian Paradox. It's a massive country, there's land everywhere, but the issue has never, ever been about a lack of space. It's been about a lack of permission to build the right kind of housing in the right kinds of places.
And these are the roadblocks. For decades, you've had these really restrictive local zoning laws that pretty much only allow single-family homes, and you combine that with painfully slow, complicated approval processes. The result? It's become almost impossible to build the dense, affordable housing that cities actually need.
And this is the trap. This isn't about individual people making bad choices. The system itself, from the retirement savings of millions of homeowners to the stability of the country's biggest banks, is now completely dependent on home prices going up forever. So, letting prices fall could actually trigger a massive economic crisis.
And that leaves us with this one final, pretty chilling thought. When a country's housing becomes so vital to its economy that its value can never, ever be allowed to fall, affordability for everybody else becomes impossible. It has locked an entire generation out of the housing market and leaves Canada facing a profound and, so far, unanswered question. What happens next?